Assalamu alaikum friends. This is a video for the fixed asset module in SAP S4 HANA Financials. So conventionally it was known as FIAA. A stands for Asset Accounting, and we move on to some of the basic concepts in asset accounting, and then we will come on to the hands-on part. So this is the agenda for today's discussion. We shall discuss the asset as a subledger to the general ledger. So just like a vendor is a subledger, is a detailed ledger of accounts payable, a customer is a detailed ledger of accounts receivable. Similarly, individual assets are details of general ledger accounts assets. So for example, in general ledger, we have just furniture and fixtures. In individual asset accounting module, we will have individual furniture and fixture items created and managed. Then we shall discuss the account determination. We shall see what does it mean in SAP context. There is a thing asset known as asset class. So we shall see how it is related to asset accounting. Similarly, depreciation key, depreciation areas, chart of depreciation. These are the specific terms that SAP use in the context of asset accounting. And then we will see how asset master data can be created and some other features which are delivered in asset accounting. So you can see in this slide that a general ledger, in general ledger, when we debit asset, a corresponding detailed ledger asset account is debited in asset accounting. So this actually is the thing which is happening in FIAA. So this is about the asset accounting. Similarly, on the right hand side, you can see that accounts payable account is credited when we purchase an asset. So when we purchase an asset, asset is debited, liability is credited. But again, in the detailed ledger, we actually, in the account payable submodule, we credit the vendor. So just like account payable and account receivable submodules, asset accounting is also a submodule within FI. So I hope it is clear, and we move on. So just like we open a separate master data for every vendor, for every customer, similarly, we create a separate master data for every asset. So for example, if a company owns 3 buildings, 7 vehicles, and two, for example, machineries, then we need to create the individual asset master records for the 3 buildings, each of the 3 buildings, for each of the 7 vehicles, and for each of the 2 machines. So that we can manage them for accounting purpose, and even we can manage those assets practically for operations management purposes. The T code to create an asset master data is AS01, and we shall see how does it work. So you should note that the creation of asset master data is different from the acquiring of asset, right? So just like when we created the vendor master data, we didn't have any accounting transaction with the vendor, but we just created the master data, that main permanent details of the vendor. Similarly, when we create an asset master data, we just create a placeholder for the asset, which mentions, for example, if we create a master data for vehicle, it mentions that this is a car, this is a 100cc car and a 1000cc car, for example, and this is the color of the car, and this is the depreciation method which will be applied to the car. But while creating a master data, we have not recorded the value to an asset. We have not debited an asset, because debited an asset is not a master data, it is a transaction data. So first of all, we need to create an asset by AS01, and then we will acquire the asset through a different T code, which we shall see down the road. So before that we discuss the creation of master data, we need to discuss some of the other concepts which we outlined in the last slide. So let's move on. There's a term used in SAP which is known as account determination. And this is a very generic term. It is not specific to asset accounting. It is a very generic term used in many other modules in SAP. And it means linking to the general ledger. In account determination, whenever the term account determination is used in SAP, it means linking something to the general ledger. So when the term account determination is used in the context of a material, it means linking that material to the general ledger inventory accounts. When it is used in the context of asset, it means linking those individual assets for which a master data we created in AS01, linking them to the general ledger. So just like if you recall that we link a vendor to the general ledger through a field which was known as a reconciliation account, we link the customer to the general ledger through a field which was known as a reconciliation account. So on those master data, actually SAP used the term reconciliation account, means we just mention one account to which that vendors or customers activity will be reflected. That is the reconciliation account, which is the normal ledger account for that vendor or customer. However, the case of asset is a bit different, because in the case of an asset, there is not just one account which needs to be hit when we deal with asset. For example, if we purchase an asset, then of course, if we purchase a vehicle, then a vehicle's ledger account has to be debited. But what if we depreciate the vehicle? Then depreciation expense of the vehicle has to be debited, and accumulated depreciation of the vehicle has to be credited. So there are two more accounts which are to be linked to the asset, which will tell the system that the depreciation of this particular asset will have to be recorded in these accounts. Similarly, what if we dispose the asset? What kind of the sale or disposal of fixed asset? What kind of gain or loss? So where the gain or loss will be recorded, where the disposal will be recorded. So these are the different general ledger accounts which needs to be mentioned in an asset which need to be linked to the asset master data. So this linkage is made through the account determination. So account determination is a group of GL accounts, not just one GL account. It's a group of GL accounts that can be linked to an asset but created independent of an asset. So it's not that case that for each and every asset we mentioned that, okay, if we purchase a vehicle, if we are creating a master data for a vehicle, then we mentioned that, okay, the cost will be debited to this general ledger account, the depreciation will be debited to this general ledger account, and accumulated depreciation to this general ledger account. Because if we do this exercise, then if we have 100 different computers, then this exercise has to be done 100 times, which is not a wise thing to do. So therefore, what we do is that we create account determinations separately from the asset, and then we link the account determination with the asset, which we shall see this concept will get clarified in the next slides. So for example, account determination number 03 example, right, is configured with the following accounts. That whatever asset it links, the asset will be debited to GL account number this, for example. Its depreciation will be debited to GL account number this. Its accumulated depreciation will be credited to GL account number this. Its disposal settlement will be debited or credited to this account. Its gain or loss will be debited to this account. Its loss gain is debited to this account, loss is debited to this account, and many other accounts, some other accounts can be there. So account determination number 3 is actually list all the accounts which held to be debited or credited at different instances, and then it will be linked to an asset. So for example, if I purchase a vehicle, I can link my vehicle to the account determination 3, so that I just enter one data in the asset master data, that its account determination is 3, and the system all automatically knows that if it is 3, it means this has to be debited, this has to be used for the depreciation, and etc, etc. Another important concept in asset accounting is asset class. So asset classes are used to group similar assets. So for example, 3000 may be an asset class for vehicles, right? So uh, if we want to group separate asset within asset accounting, right, we are not talking about a general ledger. Within asset accounting, we can create different asset classes, which eventually all, of course, all the assets within the asset class will have a similar GL account. So if you see this slide, right, you can see that when we create asset master data, right, you see these are the yellow circles, these are the individual asset master data. Whenever we create asset master data, we link them to an asset class. So for example, when we buy a piece of furniture or fixture, we create a master data for them, and we link with the asset class furniture and fixture. Similarly, if we buy some vehicles, we link them with the asset class of vehicles. So these are the broader groups of assets. Whenever we create a master data of an asset, it must link to an asset class, and then actually asset class links to the account determination, because we know that all the vehicles, whether it's vehicle number 1, 2, 3, or 4, have to be debited to the same GL account. All the depreciations of the vehicle has to be debited to the same GL account. That's why we don't need to assign account determination to separate asset master data. Rather, we assign account determination to the asset class. So an asset master data is linked to asset class. Asset class is linked to different account determination, and there can be different account determination, not necessarily the same account determination. There can be different. So you see these 4 different account determinations. So these are the T account shapes, showing that these are 4 different account determination. So when building will be purchased or depreciated, it will be posted to different GL accounts. When furniture and fixture are going to be purchased or depreciated, they will be posted to the different GL accounts. And eventually these general ledger accounts, which are debited or credited through account determination, eventually go into the balance sheet or income statement. So coming back to the asset class, uh, other example of asset class may be land, furniture, equipment, and these are configured at the requirement of the user. So if a company requires more asset class, if for example some companies may require vehicles to be classified in two different asset classes, one asset class for vehicles in use of staff, and one asset class for vehicles in use of transportation, for example. So we can create two different classes for vehicles if we want so. And as we discussed, each individual asset is linked to only one asset class. No single asset can be linked to two different asset class. If there is an asset which has to be linked to two different asset class, then you have to break it down into two different assets. So for example, sometimes there is a machinery which has a component of an equipment. Then you actually break down the machinery into two parts if you want to debit and treat those separately. So the equipment is then linked to the equipment asset class, and the machinery part is linked to the plant and machinery asset class. So as we all already discussed that an asset class is linked to the account determination, and we just saw that the account determination is linked to the relevant GL accounts. As such, the linkage between them, which we saw in the previous slide as well, that asset is linked to asset class is linked to account determination, and account determination eventually links to GL accounts. So note that this link all GL accounts related to an asset, not just the asset cost account. So when we say account determination, it's not just to which account asset has to be debited, but also carries the account numbers for the depreciation, accumulated depreciation, disposal, gain, loss, etc. So another image to demonstrate the same concept: when we buy individual asset, we create the master data for individual asset, we link them to asset class are already linked to account determination, and this already links to different treatments for assets and liabilities. So asset class has some more features to do, some more controls to do. For example, asset numbering is actually controlled with the asset class. So for example, for asset class office equipment, whenever we buy equipment, they are automatically numbered within the equipment asset class. Similarly, vehicles are separately numbered within the vehicle asset class. Also, asset class has the default values for depreciation method and rates. So we actually mentioned the depreciation methods and rates in the asset class rather than in individual assets, because if we mention them in individual assets, this will require too much time. But if we mention them in the asset class, they will be automatically assigned to the individual assets which are linked to that particular asset class. And we know from the accounting point of view that similar assets are depreciated. Similarly, this is the accounting requirement on the same rates, on the same methods. So therefore it serves the purpose. Also, screen layouts according to the type of assets. Some assets may require some information which other assets might not require. For example, not specific to SAP, just in general, if we buy a vehicle, we need to mention the engine capacity. But if we buy a table, we don't need to mention an engine capacity. So we actually link the screen variants, the form, the available fields also according to the asset class in the configuration. So we link when we create asset class for vehicle, we actually tell the system that what sort of field should appear when we create a vehicle, and when we create an asset class for furniture, we tell the system that what is needed on the screen when we create the asset of a furniture. So they also control the screen layouts. So there's a special asset class which is known as asset under construction, AUC, asset under construction. So this is an special asset class, and let me come on to that slide, asset under construction. So this is asset under construction, right? Let me try to circle it. So this is a special asset class because we all know that capital work in progress is treated separately from accounting purposes. For accounting purposes, it is to be shown separately in the annual report, in the financials. It is to be treated separately. There is no depreciation calculated on capital work in progress, and there are some other things. Again, there are some other features. For example, its value goes on increasing until and unless it is completed. So if we are actually constructing an asset ourselves. For example, manufacturing companies do manufacture their own buildings, their own factories, then this class is used. Then there's a concept of a depreciation key. So all the depreciation parameters are controlled through the depreciation key. So for every depreciation key is actually composed of depreciation type and depreciation method. So depreciation type is actually SAP delivers three types of depreciation. One is the ordinary depreciation, which is the accounting depreciation we all know. The second is the special depreciation, which is for those of you who have worked in tax, especially in Pakistan, there is tax law actually has its own depreciation rates. and it has its own special depreciation rates. For example, there is sometime initial allowance given to the companies in Pakistan if they import some new machinery, they install some new machinery because it creates employment in the country. So this special depreciation, which is available in some of the years, not available in the rest of the years, is also possible in SAP. And ordinary depreciation is something which will repeat every year. And unplanned depreciation, if there is a sort of impairment or something, I don't need to discuss the accounting requirements of impairment, but just the system provides that if there is an unplanned depreciation because of damage to the asset or there is some other thing, reduction in value, then we can control it through the unplanned depreciation. We can record it through the unplanned depreciation. So remember, depreciation key is composed of depreciation type, which is one of these three types, and depreciation methods. So we all know depreciation methods. We are accounting students. That's the straight line method, declining balance method, sum of the year series methods, production units method. So there are different methods. So each depreciation key is as such a combination of depreciation type and calculation method, right? So it is repeating again and again just to make the concept very clear. And deposition keys are entered in asset master record data, but they are defaulted from asset class to which the asset belongs. So since all these similar assets are actually depreciated similar on the similar basis, therefore it is not wise to assign depreciation key to each individual asset. It can increase our workload. So what we do is we assign the depreciation keys to different asset class. And then when we create an asset through that asset class, when we link the asset master data to that asset class, the depreciation key is automatically linked, is defaulted from the asset class. But having said that, there is an exception that we can change this default value within the asset master if we want. So if we want to treat some of the asset differently for any region is not discussed here, then we have the liberty to change the deposition key within the asset master record, although it is defaulted from the asset class. So asset under construction, which is a special asset class, there the deposition key assigned to the asset under construction class is 0000, which assumes that there is no depreciation method, there is no depreciation rate, there is no depreciation type, because asset under construction are not depreciated. So since it's part of the asset, so it has to have some depreciation key. So we don't say that we don't assign any depreciation key. We have to assign a depreciation key to formalize the system. But the depreciation key is created such that there is no depreciation associated within that depreciation key. So there is a separate component, investment management and project systems, which is also available within SAP system. So if we want to make use of them for the asset under construction, because an asset under construction is for all purposes, it's a project. So project systems or investment management module can also be utilized within SAP for these type of assets. So I end this video here, and in the next video we shall see some further concepts of asset accounting before moving on to creating the master data of an asset.